Hello everyone, welcome to Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in a very important session where we are going to discuss the weekly current affairs. As you all know, that finance is one of the important aspect of your examination and many questions in the exam are going to be asked from finance. Keeping the same in mind, we at Testbook, we have started up with a weekly series, and in this weekly series we cover the current affairs related to finance. I'm pretty sure if you're preparing for these exams like RBI Grade B or maybe SEBI or NABARD or for that matter any other bank examination, you know this very well that in these exams current affairs is going to play a really very important role, and that too the finance current affairs are very important. So in order to help you guys to clear this examination, that too in the very first attempt, we at Testbook provides you with the current affairs, and we have categorized these current affairs on weekly basis. What I mean with the term weekly basis basically means that the entire week news is covered. The entire week's news is covered in this particular session, and I can assure you if you're joining us on regular basis in these sessions, or I would say in these series of sessions, it is going to be really very important for you all. Now you must be wondering, so what series you are talking about? Then I would like to discuss the entire series which we cover for you, that is from Monday to Saturday. From Monday to Saturday, we try our level best that we cover the current affairs on weekly basis. We cover the current affairs on weekly basis, and I can assure you guys, if you're joining us in this particular series on regular basis, you will be in a position to answer most of the questions based on current affairs. 60% of your phase 2 examination is going to be based, 60% of the phase 2 examination is going to be based on the current affairs itself, and keeping that part in mind, we have taken up this particular initiative where Monday we have weekly PIB analysis, then on Tuesday we have weekly finance current affairs which was covered by me in the yesterday's session. Then we have on Wednesday, that is Wednesday, we have weekly current affairs related to RBI where we cover the RBI related current affairs, which include current affairs related to RBI latest schemes, latest initiatives, press release, and many more. Along with that, on Thursday we have the weekly current affairs related to ESI. Then we have government schemes on Thursday, ESI current affairs on Friday, and the important reports are live every Saturday. The last but not the least is if you want to download the PDF of this session, the PDF of this session will be available on my Telegram channel, and as you can see, the Telegram link is now available on the screen itself. You can just scan the QR code in order to download the PDF of this session after the session completes. Here we go with the first news of the day. The first news, if I start with this, the first news from where we are going to start our discussion. Give me a second, guys. Just give me a second. Give me a second, guys. So, before we start the discussion, remember that you need to download this PDF of this particular session after every video and do revise this particular PDF before you go for the examination. It's going to help you a lot. So let's begin our discussion with the first news of the evening. The first news of today's evening is now on your screen. The news talks about public sector banks record net profit of 85,520 crores in first half of the financial year 2024-25. One thing which must be clear to you, whenever we use this word first half of a financial year, the first half, it is generally represented as H1. It basically means April to September. It basically means April to September. If you count, it includes 6 months, that is April, May, June, July, August, September. And the second half is October to March. Second half is October to March. So recently the news talks about the first half of the financial year. Public sector banks, the banks which are owned by Government of India, it has recorded a profit of what value? So the profit which has been recorded is of value, that is 85,520 crores. Let's try to decode this particular news in much detail. So I'll start my discussion with the first point. The first point says that in 2024-25, the current financial year, public sector banks, the banks which are owned by government, that is government owned banks, the banks in which we have more than 51% shareholding with the government. In total, we have 11 nationalized banks which are owned by government and one is State Bank of India. So in total, we have 12 public sector banks for which the discussion is done. So including State Bank of India, it has reported a net profit of 85,520 crore rupees, marking an impressive growth of what? So there is an impressive growth of 26% in comparison to the last year profit for the same period, which was 67,000 crore rupees. Remember that this significant achievement basically showcased that yes, now public sector banks, they have decreased their operational expense, or I would say now they have become more efficient in terms of operational expenses. Financial resilience of the public sector banks, which is driven by asset quality, or I would say better asset quality. Credit monitoring is done in a better manner and the operational efficiency is enhancing the, I would say, the existence as well as the capacity of the public sector bank. So this is a good news. This is a good news because there was a concern that in the near future, public sector banks will be privatized because they are not doing well in terms of huge, I would say in terms of huge losses they are bearing. But in order to overcome those talks, or in order to overcome those issues where we were expecting that in the near future, it is possible that the public sector banks will be privatized, we can see a ray of hope where it is very clearly mentioned that yes, now the public sector banks, they are doing well. And in comparison to the last financial year itself, public sector banks, they have recorded a good increase in their net profit value, and now the net profit value has increased by 26%, which is around 85,000 crores, which was earlier what value? So earlier it was a value of 67,000 crore rupees. Is it clear till this point, guys? Is it clear till this point? Okay, now let's move on to the next point. The next important point in this particular context is from where we will be discussing this or continuing with the given news. The point where we have is, that is the strengthened governance and the capital base. The question is, we have witnessed that yes, net profit has increased, but not only the net profit, there is the overall improvement in the bank's day-to-day operations. And if I talk about the overall improvement, we will be discussing about the first one, to turn around in the fortune of public sector bank. It has been very clearly witnessed that yes, public sector banks, they have strengthened their governance practice and they have increased their capital base. So what are the key governance reforms which have been done in the banking sector, especially the public sector banks? So the government has implemented several key reforms, which include first one, that is arm's length selection of top management to ensure transparency and efficiency, which means these days the top management appointment selection is done in a very transparent manner, as well as in a very efficient manner, so that the top leaders are appointed or elected in a very, I would say, effective manner. Second point is introduction of non-executive chairperson for the nationalized banks, which brings enhanced accountability. Third is filling of key leadership positions through market-based recruitment, which ensure that yes, appointment is done on the merit basis rather than on the recommendation basis. So these initiatives, they have transformed the governance of the banking sectors, or I would say it has strengthened the overall public sector banks governance. Here is a very important information which I would like to share with you. If you are preparing for RBI Grade B examination, there is a possibility that a question can be asked. Recently, public sector bank governance has been strengthened. Could you discuss few of the reforms which has led to this strength, or which has led to this improvement? Then you need to answer these points, that arm's length selection for the top management, you need to explain it. Then you need to discuss what is non-executive chairperson, how the appointment is done, how it is going to increase the accountability, and then you need to discuss filling of key leadership position through market-based recruitment, which will undoubtedly ensure merit-driven appointments. Then the second part is, the question could be, public sector banks capital base has enhanced. Please discuss. Then what will be the answer? So the answer to that question is, increased capital retention has improved the capital to risk weighted asset ratio. That means over the period of time, banks capital adequacy ratio has improved, which undoubtedly add on strength to the bank, as well as it gives the bank a chance to work in a synchronized manner in order to achieve the set targets. Second point is, public sector banks, they have successfully enhanced the shareholder value. If I talk about the enhancement of the shareholders value, it means distributing 61,000 crore rupees in dividend over the past 3 years. What does it mean? It means that if you are holding the shares of public sector banks, then obviously if you are a shareholder, you will be eligible to enjoy profits earned by the company, and the profit which is shared to the shareholder after paying the taxes and all, that share paid to the shareholder according to your shareholding is known as dividend. And in the past 3 years, the dividend which has been distributed to the public as a shareholder is 61,000 crore rupees, which is undoubtedly increasing, which is undoubtedly showcasing the increase in strength of the day-to-day operation of the banks. This reflects that financial strength and a strong commitment to reward the shareholders, which will undoubtedly enhance the trust as well as investment, and it will undoubtedly result in increase in price of the shares of public sector banks in the secondary market. And if the price of the share is increasing, that means the market cap is increasing. That is what I'm trying to say. Moving on to the next point, improvement in the asset quality. Whenever we talk about asset quality, it means basically we are talking about value of NPA, or the value of high quality asset with the bank. So one of the most significant indicator of the progress made by public sector banks in the sustained improvement, that is asset quality. So how I can talk about asset quality? The first point is decline in NPA. Gross NPA has seen a sharp decline. So gross NPA is what percent? So it is 312%. 312% of what? So 312% of the total loan. Out of the total loan, 3.12% is basically declared as NPA, which was pretty high 5 years or 4 years, 5 years or 6 years ago. That is in March 2018. In March 2018, it was not only above 10%, it was 14.58%, which is almost 5 times the current value. On the other side, if I talk about net NPA, now if you don't know what is a difference between gross NPA and net NPA. For your information, I'm just adding up the detail over here. So gross NPA means the total NPA of the bank, but when we subtract provisioning means the reserves which are maintained by the bank in order to counter the NPA losses. So the moment you subtract provisioning from gross NPA, the value which you receive is, that is net NPA. This is going to be the actual loss which a bank is going to bear, even if the provisioning is exhausted in overcoming the NPA losses. So the net NPA is just 1%. Net NPA is just 1% as per the latest data, which is a great improvement. Moving on to the second point. So the second point is intervention leading to success. So this success has been driven by targeted intervention, such as first one, rigorous recoveries of default loan. For example, government has even set up an organization, that is NARCL, which was targeted to purchase, or which was targeted to transfer the NPAs of around 5 lakh, NPAs of around 2 lakh crore rupees, NPAs of around 2 lakh crore rupees, and the target was all those loans which have turned into NPA but they are of value greater than 500 crore. So rigorous recoveries of defaulted loans, improved underwriting standards to ensure better loan approval. So improved underwriting standards means now before bank gives the loan approval, bank should check the collateral value pretty well, so that bank should reach to a better decision that whether the loan should be given or not. Substantial write-offs of legacy bad loans to clean up balance sheet. So what is writing off? So writing off basically means when a bank remove or exclude the NPA value from its balance sheet is known as write-off. If I give you an example, which will undoubtedly help you to understand this point in a better manner, then my answer to this particular question would be, let's suppose there is a bank and the bank's NPA value is 10,000 crores, and this 10,000 crore NPA value has been now declared as loss asset. Loss asset means now there is no possibility of recovery. So bank will remove this 10,000 crore rupees from the asset side, which is having a negative impact on the bank's balance sheet. And when bank removes or bank overcome the NPA losses from its profits or from its reserves, that process is known as writing off. And the moment write-off is done, it is basically an initiative taken by banks to improve their balance sheet, to improve their I would say financial statements. Moving on to the next point. What does the next point say? Role of asset quality review. So a critical turning point came in 2015 when RBI introduced asset quality review. So it has a very important role which has enhanced the asset quality of the banks, because AQR has mandated transparent recognition of NPAs, which has helped not only the banks but the public as well as the investors to know in much detail that what is the current NPA outstanding of the bank. And on the basis of this NPA data, bank is performing or bank is managing its future targets so that it can achieve the future targets, along with overcoming or along with trying its level best to overcome the current NPA issues. Along with this, reclassification of restructured loans. What is restructured loan? See, whenever you borrow a loan and you are not in a position to pay back the loan, and bank knows this very well, if the loan is not repaid, the recovery is quite impossible because very low collateral has been given by the borrower. So in that particular case, rather than declaring the loan into NPA, into loss asset, what bank do is bank restructure the loan. Restructuring basically means a restructured loan is basically a loan in which RBI or in which bank change or review or review the time period of loan. Bank review the time period of loan. Time period of loan basically means, let's suppose when you have borrowed, the loan time period was 10 years and today you are not in a position to pay back the loan. So bank can increase the time period. Even bank can decrease the lending rate. So the moment bank has decreased the lending rate, bank has increased the time period within the tenor of the loan, that is known as restructuring in order to decrease the EMI. And if the EMI is decreased, we are expecting that yes, now the borrower will be in a position, or borrower will try to pay back the loan once the EMI has been reduced. So this is basically known as a restructured loan. So this has also helped the banks to improve their asset quality. Role of asset quality, the last point is, while this initially led to the sharp increase in reported NPAs, because the moment reporting of asset quality was made mandatory and strict actions were taken, undoubtedly it has resulted in increase in NPAs in the starting itself, but over the period of time, it has not only increased the reporting of NPA, but it has also made the banks proactive to control the NPA, and number of initiatives and number of decisions and number of, I would say, targets were set by the banks to overcome the current situation. So that was end of the day. That was end of the day a beneficial. That was end of the day a beneficial situation. That was end of the day a beneficial situation for the banking sector. That is asset quality review. That is asset quality review. Last is, that is supporting credit growth across the key sectors. So banks' credit growth has increased. Credit growth means banks' loan has increased. The loan amount which bank has given, or the amount of funds which bank has given on loan, it has increased, and this lending has supported the key sectors of the economy. So public sector banks have played a really very important role in extending the credit. First one is to the retail customers, which undoubtedly has given a positive impact to the direct consumption. Then MSME loans, as we know that MSME is the backbone of the economy, and now MSME has been included under the priority sector lending. So it not only becomes it has not only become the bank's target, but it is also the bank's liability to reach its priority sector lending targets by lending or by providing loan to the MSMEs. Last is infrastructure projects. Huge number of infrastructure projects have been supported by the public sector banks, which are not only enhancing the bank's balance sheet, but they are improving the overall. Stability and quality of the country. Last but not the least is focus on green finance and ESG. Green finance basically means when you provide loan for green projects. When you provide loan for green projects, that is known as green finance. So public sector bank has increased its role in green finance by providing environmental sustainable projects funding, as well as they have emphasized on ESG, that is environmental, social and governance. So this is all about the current discussion. But the moment I started this news, I talked about mergers. So no new public sector mergers, but stronger synergies. What this basically means? So recently Pankaj Chaudhary, Minister of State for Finance, has improved the Rajya Sabha that the government is not thinking, not planning any another round of public sector banks mergers, because now the banks are doing really very well. When the merger is done, so merger is basically done when the banks are not doing well, in order to avoid a possibility that one of the institution will be declared as insolvent. It's good कि भैया उसको क्या करो, merge कर दो with a bank which is doing well. But if all the banks are doing well, there is no need of merger. As I started my discussion from the starting itself, that yes, now there is a probability, or it is very clearly mentioned that as of now, government is not planning any kind of mergers among the public sector banks, which is an important point which you need to note down in this particular news. Moving on to the last phase of this news. The last phase talks about public sector banks. They are very important pillars of the Indian economy. As the current pace, public sector banks, they are expected to surpass the previous financial year Last financial year, the net profit was 1.46 lakh crore, but in first half itself, banks have reached a profit value of 85,000 crores. Then it's quite obvious that they are going to cross 1.46 lakh crore mark in this year itself. First one is resilient financial institutions. The turnaround in public sector banks has highlighted that their growing role as resilient financial institution capable of withstanding challenges. So turnaround means, as we have witnessed, the one who has borrowed loan from public sector banks, once they have paid back the loan, they come back again, paying back the loan, they come back again to borrow the funds again so that they can manage, they can reach to the required, or they can fulfill their requirements related to a particular loan. So this is undoubtedly pushing not only public sector banks, but it is pushing the entire economy. It is basically pushing the entire economy. This is basically pushing the entire economy. By trusting public sector banks, we are enhancing the government bank's profit, and this profit is going to be channelized in the economy itself in the near future, so which is a positive sign. Second point is strategic partners in India's growth. So public sector bank has emerged a strategic partner in the India's growth, where India is targeting to achieve, or India is focusing to achieve, an economy target of $5 trillion. We know this very well that very soon India will be declared as 5 trillion economy, and in that particular race, yes, public sector banks are playing a really very important role. Last but not the least is, with their robust fundamentals and growing credit support, they are going to enhance, they are going to add on a lot in the overall India's growth. So let's conclude. न्यूज़ बड़ी छोटी सी थी, मैंने उसको काफ़ी बड़ा बना दिया ताकि एग्जाम में कोई भी क्वेश्चन आए आप आंसर कर पाओ। पब्लिक सेक्टर बैंक का नया नेट प्रॉफिट जो रिकॉर्ड हुआ है फॉर द फर्स्ट हाफ ऑफ द फाइनेंशियल ईयर वो है 85 करोड़ रुपीस। ऐसा क्यों हुआ सर? ऐसा हुआ बिकॉज ऑफ फ्यू रीजंस। पहला तो बैंक्स, जो पब्लिक सेक्टर बैंक्स हैं, उनका गवर्नेंस स्ट्रेंथन हुआ है। सेकंड, देयर कैपिटल बेस हैज इंप्रूव्ड। नॉट ओनली strengthening of I would say the governance and capital base. Along with that, asset quality has improved over the period of time. Asset quality improve हुई, क्यों हुई उसका भी रीज़न है सर। उसका रीज़न ये है कि जैसे ही asset quality को रिव्यू करना शुरू किया गया, इस रिव्यू ने सपोर्ट किया कि asset quality को बैंक सुधारें। अब उसके साथ साथ बैंक्स जो है, हमारे पब्लिक सेक्टर बैंक्स जो हैं, दे हैव विटनेस ग्रेट क्रेडिट ग्रोथ, और ये जो ग्रेट क्रेडिट ग्रोथ है, इट हैज पुश द इकोनॉमी टू न्यू हाइट्स। सो दैट इज वन ऑफ द पॉइंट। सेक्टोरल क्रेडिट ग्रोथ जो देखी गई, फोकस किया गया बाय द पब्लिक सेक्टर बैंक्स ऑन ग्रीन फाइनेंसेस। इन सारे पॉइंट्स को देखते हुए बहुत क्लियरली अनाउंस कर दिया गया कि गवर्नमेंट इज नॉट प्लानिंग एनी नेक्स्ट राउंड ऑफ मर्जर of the public sector banks, as they all are doing well, and we are expecting that their profit is going to cross last year's mark of 1.46 lakh crore rupees. तो ये कुछ important information है which you need to remember. आजकल बहुत ज्यादा बातें हो रही है unclaimed deposits पे, तो थोड़ी सी इसी पे बात कर लेते हैं. We have the second news. The second news talks about RBI's measures to tackle growing unclaimed deposits. First of all, so what are unclaimed accounts? What are unclaimed deposits? So unclaimed deposits, unclaimed accounts are those accounts which do not witness any kind of transaction, for 10 years, and if there is no active or inactive transaction for 10 years, then it is termed as unclaimed deposits. So Reserve Bank of India has taken a significant step so that RBI can fight against and stand against strong related to the unclaimed deposits, so that they can safeguard depositor interest while introducing efficient mechanism, and in a very efficient manner reclaiming of the funds can be done. तो याद रखिएगा, unclaimed deposits are the deposits which remain inactive, or I would say defined as the balances in savings account, current account, or term deposits which remain inactive for 10 years. That is known as unclaimed deposit, and there has been a huge rise in the unclaimed deposit value in the past years. Unclaimed deposit values in the past years. So definition is unclaimed deposit means the deposits which are untouched for 10 years. Contributors are inactivity in accounts, unclaimed fixed deposits, unclaimed funds after the death of account holder, they all contribute to the unclaimed deposits. Third point is, if I talk about the data, so the Depositor Education Awareness Fund witnessed increase of 26%, that is rising from 62,000 crores to 78,000 crores in 2023-24, saving accounts for 73% of the total unclaimed deposit. I'll help you to understand. Whenever an account is declared as unclaimed deposit, that deposit value is transferred to RBI and RBI transfer that amount into DEF. DEF stands for Deposit Education, Depositor Education and Awareness Fund. This is a fund account which is used by RBI to spread awareness among the public related to the financial literacy, banking services and many more. So earlier, the value of this fund was 62,000 crore in 2022-23. Now it has increased to 78,000 crores in 2023-24, which means there has been an jump of 26%. Saving accounts, if I talk about saving accounts, 73% of all unclaimed deposits, 73% of all unclaimed deposits are saving accounts. So the highest contributor to the unclaimed deposits is saving account, which is 73%. RBI initiatives to address this issue. The first initiative of the RBI was 100 days 100 pay campaign. So this initiative was introduced back in May 2023, where RBI has set a target to settle down unclaimed deposits, targeting the top 100 unclaimed deposits in each district, and it is need to be settled down in 100 days campaign. This scheme, or I would say this initiative, has been extended till 1st April 2024. Second is UDGAM portal. If I talk about UGDAM portal, but before I start the discussion, I would love to ask a question. According to you, what is the full form of UGDAM? It is unclaimed. Any idea? This is very important. It was in news. It was in news for, I would say, a few months, not recently, but in the past. So it is also, the pronunciation is also Udgam. Many of the, I would say, news channels I have seen, they use the word Udgam. But my question is, what is this UDGAM? What will be your answer? What will be your answer? So if you ask me the question, then my answer to this particular question is, it stands for unclaimed deposits. It stands for unclaimed deposits, UD, unclaimed deposits. Then we have G, G stands for gateway, unclaimed deposits, gateway to access information, gateway to access information. Please see, I am writing I small but M capital. So this M is basically, Udgam M is related to information. So this is unclaimed deposits, gateway to access information. Udgam stands for, it was introduced back in May 2020. It was introduced back in August 2023 in order to help, or I would say in order to enhance the process of identification and settlement of unclaimed deposits. So users, they can search using the account holder's name and bank details so that they can get to know about the unclaimed deposits in a better manner. Last is website publication. Bank must publish list of unclaimed deposits on their website, displaying the names and address. Displaying the name and address, but not the deposit value in these accounts, only the name and address, that yes, this is an unclaimed account, belong to so and so person, and this is the address which is given to the bank. New rules for inactive account. The first new rule related to the same is, that is annual review. From January 2024, banks are required to annually review the accounts for inactivity. Second is communication. Account holder must be notified through various methods about their account status if they are dormant, inactive or unclaimed. Permits up to 4 nominees now. So as you remember, I have discussed this amendment bill with you, which has been passed by Lok Sabha. Now, 4 nominees can be nominated by the account holder, for your deposit as well as locker. So these nominees, they can be nominated in a successive manner, or they can be nominated in a proportionate manner, whatever you feel like. But in case of lockers, you only can nominate the members. I would say you can only nominate the members not in a proportional manner, but in the sequential manner. That is the point. Establishes clear hierarchies for prioritizing nominees. That is clear. Encourages simplification of reactivation and nomination process to reduce inactive accounts. So these are the initiatives which have been recorded under Banking Laws Amendment Act. So banks, including SBI, they have suggested that accounts linked to government payments remain active through minimal non-financial transactions. So RBI is promoting digital platforms to update customer details, ensuring better account activity and many other things. So these are few initiatives which are going to be implemented in the near future, but this is the current status related to the unclaimed account. And if someone asks you what are the key initiatives taken by RBI to overcome the problem of unclaimed deposit, the first one is 100 days, 100 pays campaign. Second is Udgam, that is undisclosed deposit gateway to access information. Third is your website publication. Last, we have the new rules which have been introduced. One is annual review asked by RBI, which is need to be done by the banks, communication, and the latest part is the amendment. So these are the latest initiatives which have been taken in order to promote, or in order to resolve the problem or issues related to what? That is unclaimed deposit, unclaimed account. Moving on to the next news. The next news talks about Bob Card launches Tiara credit card. What is this? So Bank of Baroda Bob card, the way we have SBI card, a company, in the similar way we have BOB card. So Bob card has launched Tiara credit card, which is a premium women-centric offering designed to empower modern women. So this card is packed with rewards across various categories such as travel, lifestyle, dining, entertainment, health, and many more. But the main important part, why it is important, so this is going to offer women-centric offering in order to empower modern women. So in order to empower modern women, women-centric offering, this initiative has been taken. So the launch event was held in Penkathon, which is featured notable personalities, where we have many notable personalities where this card was featured. Tiara is powered by RuPay network and promises to be the game changer for women's financial autonomy. Second is key features. Joining an annual fees is 2499 plus GST. Fee will be waived off on meeting the spending targets. If you fulfill the spending targets, no fees will be charged. Reward is 15 reward points for every 100 rupees spent on travel, dining and international purchase. Health and safety perks will be given. Free health packages including pap smear and mammography plus a personal accident cover of up to 10 lakh rupees. Lifestyle benefits will be given, where you'll get complimentary vouchers worth 31,000. Mantra, Nykaa, Lakme. I hope you understand why it is known as women centric, and entertainment and dining benefits are also going to be provided. So that is what you need to remember. Last but not the least is, we know that Revenue Secretary of India, the name is Sanjay Malhotra ji, is appointed as the 26th governor of RBI. So who is going to hold the Revenue Secretary position of India? So the answer is Ajay Seth. So government has assigned Economic Affairs Secretary. Please pay attention. Economic Affairs Secretary Ajay Seth the additional charge of Revenue Secretary. Now the Economic Affairs Secretary of India, the name is Ajay Seth, is going to hold the charge of Revenue Secretary, or I would say will hold Revenue Secretary charge as an additional charge. And this was done after Sanjay Malhotra was appointed as the new governor of RBI. So this transition reflects significant administrative shift in India's financial government, which is going to be effective immediately. So Ajay Seth is 1987 batch IS officer, Karnataka cadre. As Economic Affairs and Revenue Secretary, he will be serving both the responsibilities until and unless the permanent replacement is done. So remember this is very important. And who takes this decision? The same authority. Appointments Committee of the Cabinet, headed by Prime Minister, has taken this decision that yes, Ajay Seth will be performing his duties not only as Economic Affairs Secretary, but yes, as Revenue Secretary of the country as well. So these are the important things which you need to remember. Rest is the extra information which you can obviously download, and read from this PDF itself. So I hope the discussion which we have done is crystal clear. You must have enjoyed the discussion. We at Testbook, we offers you with the RBI Grade B 2.0 Lakshya batch. I say 2.0 because we have already launched the first Lakshya batch, where we have received remarkable response from the students, and in order to help the students again, we have come up with the second batch. If you want to enroll yourself in this batch, what you need to do is just use a code MADHAV at the time you are making the payment, and if you use this code, you will get the maximum possible discount. The question is why I should enroll in this course. This course will not only help you to prepare for RBI, but for most of the regulatory body exams, where we'll help you to prepare for phase 1, phase 2, as well as the interview stage. In this course, we offers you 550 plus live classes, 220 plus mock tests, one-to-one mentorship, and descriptive answer writing as well. Our mock tests are aligned to the actual, I would say, platform where you are going to attempt your examination. So in a similar manner, if you are attempting a mock test, you will be in a position to enjoy or to have the exam-like experience before you sit in the examination. So do join this batch, use code MADHAV in order to enjoy maximum discount while enrolling yourself in the given batch, and use this, or I would say use this QR code in order to join my Telegram channel, where I will be uploading the PDF of this session. So thank you so much for joining. If you have joined us for the very first time, don't forget to subscribe our channel before leaving. Good luck guys. God bless you. See you soon. Bye-bye.